What is up? It's May 10th. We're going to review the week leading up to this Sunday. So that's going to be May 3rd to May 8th. We're going to be looking at low volume nodes from the prior session, overlaying them on the current session. And then we're going to be looking for high of day or low of day session market structure to be broken. And we're also going to be looking at smaller time frame structure as well to be broken going out of these low volume nodes. So let's get into it. We're on the 15-minute chart here. At this point, if you don't know how to identify low volume nodes, I have some other videos that talk about low volume nodes. I'll link those in the description. But for the most part, you'll see I overlay the volume profile tool over the current session. And then what I'm doing is I'm just finding these pullbacks here and casting them onto my screen. This one can probably be a little bit wider, maybe about there. We have one over here that I overlay, and then two more. This one is not amazing, but it's not bad. And then here as well. Then I also like to mark out the point of control. Let's try to get this a little bit more. There we go, that looks better. So that's what I've done. I've already marked out all of these low volume nodes throughout this week. We can quickly review those just so you can see what I'm dealing with, working with here. Here is the, oops, didn't mark that point of control out. You can see there's one up here, there's one right here, but also there's one right here, here, and that's about it. This is the most obvious one here, but we do have a little one here and here. Now this week was very trending. It's more like market manipulation because the market never moves straight up like this. Very weird, very sketch. I don't buy it. That's a whole nother story or a whole nother video. But in the meantime, let's see how we can adapt to these situations. So where were we? We were right here. Monday, yep. So then this is the next one we're looking at. We're overlaying this one here. We got the point of control marked out. Point of control is hard to see for some reason on this. Interesting, I don't know why. But it is there. It's the area with the most volume traded. We have here, and here, and we've overlaid that on this current session. We'll go into this, how do you adapt to this situation where when you go to finally trade for the New York session, there's no, you're way beyond any low volume nodes. How do you adapt to that? We'll get into that in a second. Here we'll overlay this one so we can see the low volume nodes that I identified. 1, 2, I didn't mark these ones. Let's just do that now. Price was just trending so much. Like, why bother? But we'll do it anyways, just so you can see how I kind of look at them. I'm looking for the pullback and then where volume really picks up. So right here it picks up, and right here, I'm looking just solely at this volume profile. Here to here is where this one is, and that's how I do that. Up here, I'm really going to focus on that one, and then here as well, we have our point of control here. I'm going to make them yellow, and I'm going to make them thick. Then we got Thursday. And again, we'll talk about how do we, and here's a low volume node here that we put here into the current session, and here as well. And then we have our point of control here as well. So first, let's just go back. We're going to go down to the 1 minute, and we're going to go back to Sunday. We're going to use Friday session on Sunday to look for a trade. So we want to trade a market structure break coming from the high of session or from the low of session. And then we also want to trade a market structure break coming out of a low volume node or going through the low volume node. So let's zoom in here, see if we have any setups. I don't know why that it just got rid of that indicator here. So there's another indicator. Of course, there was barely any high of day or low of day reversals this week. I swear, every time I make a video about a setup, the following week, there's really none of those setups. So I have another one here. LuxAlgo actually made this indicator here, but I've modified it. I've added some highlighting candles, some volume things to it. So let's see how that works. So what I like about this one is it marks out structure, and it does so in a very interesting way. I don't know the exact way it does it, but it does it in such a way that it's very consistent. It's not as simple as just identifying a swing. It's really interesting how he did it. There's more about the script. I guess not that one. It's this one here. It's called KNN Market Architecture by LuxAlgo. We could read about it, but I'll let you guys do that. I'll put this in the link as well. And I'll also put a link to my modified version as well. I don't want to take any credit away from him or her, or it's a group, I don't know. But they did a really good job with this, and I just modified it a little bit more to identify my signals. I keep rubbing my nose. Just allergies, I guess. But yeah, so let's get into it. So we want to trade high of day, low of day session reversals, or we want to trade market structure breaks out of low volume nodes. So here we're kind of working in this low volume node. Market makers are maybe filling this volume imbalance up from the current session. I don't know, I don't care. All I know is I want to trade out of it. So right here we have a purple highlighted candle. This purple highlighted candle is what I added to the LuxAlgo indicator. I want to know, when do we have a candle that closes beyond the structure that it has identified? And that's right here. There is one thing to this, is it needs to have more volume than the prior candle, but it can't have way more. So we have a volume indicator down here to make sure we're not spiking with volume, and I'll show you what I mean by that in a second. I also have here an ATR super trend. This is by LuxAlgo. That's LuxAlgo and QuantAlgo. This is simply just set up to mark one ATR away from the candle. So that's where my stop's gonna go. Then everything is based on that. These are the settings I have. I can link this as well in the description if you want to use that. Additionally, while we're here, I have a Discord. We only have 4 members. I just started here. They left me on red. Nobody's responded to my question to everyone how they did for the week. If you guys want to join, please do join. I'm posting in here setups that I'm taking, just stuff like that. Things that we having a good time with, things that we're having a bad time with. Things like that. Indicators, my indicators I have here, how to use them, examples of a false signal that you want to avoid, just things like that. So join there if you want. Link is going to be in the description as well. A lot of links in the description. So here we have a break through the low volume node. It closed beyond the structure here that the LuxAlgo indicator identified, and we don't have a massive spike in volume, really no spike at all. Just a nice tad increase in volume showing that sellers are gaining momentum, and you can see price drops. So then what we want to do is, once we get down to the low volume node, we want to look for price to come back up and break structure. So here we have just that. But if we look, you will see that we have a relative spike in volume. We have a very low volume and then this spike. And if I call it a spike because if you look back to the left, it's the highest volume in the last 20 minutes. And so to me, that's kind of a red flag. Where's all this volume coming from? Is this strictly just buyers? What is going on? I don't know. This is abnormal. And my strategy is not based on abnormal conditions. It's based on normal conditions. So a huge increase in volume is abnormal. I'm not going to trade that. Now, additionally, you'll notice there's a black candle. Let's say you did take this signal and your stop's here. A black candle indicates that it's an opposing candle. So if I turn this off, you will see you go from a green to a red candle. It's just an opposing candle. This is going to get you out of losing trades much earlier than if you're just staying in, and I'll show you quite a few examples of this where you save your behind from losing a full R. So even though I'm only targeting 1.5 R, I do have 1, 1.5, 2, 2.5, 3 on here. I'm only targeting 1.5. But what you'll find is I never really take a full loser anymore because we are identifying opposing candles and getting out of them. Now we wouldn't take this signal here because we'd be trading into a low volume area. Low volume is basically where we expect reversals to happen. So we don't want to trade into those. We want to trade out of those. This here, again, we wouldn't take this because we're trading into an area, a low volume node, where we think a reversal is going to happen. And hindsight's always 20/20. maybe this would have worked. It would have hit 1R, which is break even for me. But again, that's not even the point. We're not taking that trade. Now here you can see we have a signal candle. We went into the low volume node. We have the structure identified here. Can I make this bigger? Yes, somewhat bigger. So hopefully you guys can see that better. So this is the structure here. There's a little dotted red line. I think you guys can see that. We're looking for that candle to break through. We have a purple candle here. There is an increase in volume here. If we look back to the left, it's not the most volume that we've seen by a long shot. You know, just 12 minutes ago, 11 minutes ago, we had this increase of volume over here. So this isn't a horrible one to take. The only issue with this is that we're trading into a low volume node, so that's probably one you don't want to take. Let's say you do take that. Here's an instance where there's a black candle. That means this candle is an opposing candle. You have a red candle, then green candle. You'd maybe get out here at maybe a little tiny 1/10 of an R loss. Again, I don't advise taking this because your target is going to be down here where it's a low volume node where we've gotten a reversal before. It's the low of the session. It's the low of a session for a reason. Low of the session is because we've had buyers there. It's the low because buyers aren't letting it go lower there. Why would we want to trade into that? We don't want to sell into buyers. We want to sell with sellers into areas where we know that we have plenty of comfort room or comfort zone for profit. So let's just keep going through here. Okay, so now we worked our way on the other side of this low volume node. We broke through it and now we have a signal. We look at the volume real quick. Okay, cool. It's not the most volume by a long shot. This is a pretty good amount of volume here breaking through. Oops, wrong button. Our stop always goes to where the ATR super trend is showing, again, based on these settings. Pause it here if you need these settings. These are the only things I changed. I turned off the other things that I don't need. But that is where the stop goes, and that then determines our targets. So you can see this instantly goes up to 1.5 R, and you're out. We're not taking this because we'd be trading into a point of control and a low volume node, two areas notorious for either consolidation or a reversal. And I stopped trading at 10:30 my time, MST, so we're done for the day. So we had 2 trades, both within about an hour and a half from each other, and within 2 hours of the ETH session open. So now let's fast forward to, and as we go through this, you can see how these low volume nodes really reverse the price, and then until it drops into another one. This is a great example right here, actually. Again, I wouldn't be trading at 3:25 a.m., but you can see how it comes in here. The first structure it breaks is going to be your signal. Stop goes here, target here, bam, bam, you're good to go. This does not have more volume. There's no volume spike here. It's just a nice average amount of volume. Easy. All right, now we're at the New York session. I don't trade for the first 30 minutes after the New York Open because it's just too volatile. So that's somewhere right here. We can start looking for a setup where it dips in and gives us a long here. Our first structure break is what we're looking for in the direction of the reversal. That would be this here. This one is going to be let's see, this would be, I always go 1 tick beyond my stop because my stop is, as soon as it hits the stop, you get filled on a limit order. So I want to go 1 tick beyond. I think here though, it gets stopped out anyways. It looks like my stop would be at 89 or 95.25. The low here is at 89.25. So believe it or not, I would have survived this. However, again, this is a black candle, so then I would have immediately gotten out for about a half R loss. Yeah, price goes up in my favor, whatever. Hindsight's 2020. Wouldn't have known that. Didn't take a full loss there. Now moving on to a better setup here, you can see we have this candle here signal through the break of the structure break and through the low volume node. Perfect. Not a huge spike in volume by any means, just a nice average normal move. Go like that, go like that. we are trading into a low volume node. We are coming off of a off point of control as well. Again, maybe you don't want to take this. 1R is right at the beginning of the low volume node. I say that because 1R is where I go break even. So I'm like, hey, you know what? If I go break even right as we approach or go into the low volume node, my target's right here. If it hits if it hits whatever, I'm at break even. So that's one that we could take there and have no problem whatsoever. Price dips into here. We have a signal breaking through the low volume node, but if we look, this is the most volume by a long shot for the last, I don't know, from 9. We haven't seen this volume until 8:22, so almost an hour ago. That means I don't want to take this. Let's suppose you did take this. You would have hit 1R anyways, based on this ATR Superband stop setup, and you would have had nothing to show for it. That's okay. That's a risk-free trade. Maybe you want to take that, but again, look at the volume. Too much volume, especially going into like a low of day or a high of day or into one of these low volume nodes, typically indicates a reversal. That doesn't mean you take the reversal. It just means don't take your setup. Okay, here we have a break through the low volume node with a break of structure. This could potentially be a signal, but let's look at the volume. If we look at the volume here, you will see that this is the most volume over the last 23 minutes. This is not a signal that we're going to take. Okay, here we tap into this low volume node. First structure break is right here. Beautiful. Let's take that. If we look at the volume, we got to make sure that everything checks out. This is the most volume in the last, what is that, 10:34 to 10:18. So that's about 16 minutes ago. Not horrible by any means, right? That would be, I can't, that's 10 minutes, 1, 2, 12 minutes. Yeah, so about 16 bars, 16 minutes ago. That is okay. That is a good setup. It's a nice normal sized candle with a lot of, not a lot of volume, but a good amount of increase in volume, which shows that, yeah, sellers are stepping on board here and they're going to push price down. Hits 1.5R, that's your target. Good to go. I don't know why that's highlighted. That's going through. We don't want that. We dip back in. We don't get a structure break really immediately. We don't want to really take this kind of thing here. We want it to happen like this. You know, you get the consolidation and then you get that breakout. This is, you know, you dip, and then you get it. I mean, you could take that. You do see we have a black bar here. This is a case where if you did take this, we got to check with the volume. Volume's good to go. It's the most volume in the last maybe 5-6 minutes. Okay, cool, that checks out. We have the first candle once we enter is a black candle. It's an opposing candle. We get out, break even. This one happens to be like a break even trade. You can see this saves you from a full loss. So even when you make a mistake, we have the potential to avoid a full loss. So yes, we're targeting 1.5R, but what you're noticing is that our losses typically are never a full loss. So it's really much more than 1.5R when you start to look at the big picture of things. So that's Monday. Monday we had, and let's just leave that, I guess. 1, 2, 3. 3 trades. This one, questionable. Did you happen to precisely put it where it needs to be? I hope so. I don't know, actually, now that I say that. Can I make this a little bit finer here in terms of its, yes we can, and then values on price scale. All right, let's see. Okay, so this was at, really, they're gonna do that? 95.36, you can't have it. That's not even an interval on here, okay. So this is more precise now. Now we can see that it would have been there at, oh yeah, so it would have been at 95.50. This low here was 95.25. Okay, so this would have been a full loss here. Not a big deal. Again, that's really not a great looking candle. It's wicklet. almost wickless. But whatever, whatever. We then have a full win here to offset that, and then we have again, wouldn't really take that because of the volume. We then have this one here, which is a perfect signal, which would have won. So you have 3R minus 1R, leaves you with 2R. It's a good day. All right, so now we're going into Monday. We're already 20 minutes, oh my gosh, 20 minutes in. Let's just kind of zoom through this here real quick, see if we can find some signals coming out of this low volume node. Let's see what we do have one of my signals, the high of day, low of day structure break. We make a high of day, and then our first, okay, so here's the high, and then our first swing 3 is going to be here, yep. And here's our signal breaking through it, and that's going to be our target 1.5R right there, and we're good to go. So we did have one of our signals, one of our high day, low day structure break indicators here. That one checks out, and that is high of day gets taken, the first fast 3 that forms, and if I'm in replay mode, you would see that it would be marked out here with this purple line. We close beyond that purple line with more volume than the prior candle. You do want to look for excess volume. Here you do get a little bit, but with these signals you don't have to worry about as much on the smaller scale ones. You go back to Tuesday. All right, that's that one. Let's see, nothing coming out of there, nothing coming out of there, nothing coming out of there, nothing there. Okay, here we go. We got a high of day here. High of day, this red dashed line. Here's our swing 3 that the indicator would have marked, but again, we're not in replay mode, so it's not showing all of them. And there's our signal. Oh, gotta turn this back on to find where our stop would be, right there. Bam, this thing just melts right down into our target at 1.5R. All right, coming out of this low volume node, we have this here. If we look at the volume here, it's kind of a red flag, it looks like. This is gonna be the most volume in the last, let's see, 15 bars, not so bad. But yeah, you really want the reversal candle, this breakage structure, to be more down towards here, like right after the move. You don't want it after you have, already an upwards move, because then it might be time for a little bit of a pullback before it continues up. Kind of like this right here. This is one where you'd be like, okay, we have a, we're in the low volume node. We immediately get our signal. We do have a black candle, so you would have taken this, not for a full R, maybe 3/4 of an R loss, and then it does go eventually in your favor. It is what it is. But if you're sticking around, again, I'm not trading at this time. It's 11:05 p.m. my time. I'm snoozing at that point. And here is a signal here. This is good amount of volume. You do have a black candle here. Maybe you get out soon. This is more like a doji. This is like 1 or 2 ticks thick of a body. If you're zoomed out, you don't even realize it's really a black candle or opposing candle. So maybe you stay in this and you see this go right up to your target. I really shouldn't even be back testing this with you guys at this hour or replaying this mode, but just kind of looking at it here, we break through the low volume node with a break of structure here, so you can take this. This looks like it's going to be a 1 or a break even trade. It hits our break evens there at 1R, and then it goes back down to our entry for nothing, which is good because it avoids overall. No, actually, yeah, it did work its way up over time. All right, let's go to the New York session for Tuesday, 24 minutes in. All right, let's see. Okay, so this is an example that I wanted to give. So what if you get to the New York session and there's no low volume nodes here? What you can do is you can begin to look for the session low volume node. So I don't trade for the first 30 minutes. So that would be about here. Nothing really going on too telling here. So we can kind of just start to extend it. Here we're just kind of consolidating anyways, not much action going on. We do have a point of control here. Maybe we can look for a bounce off of this. There we go. We do have a low volume node here. We do have one, surprisingly, here as well. But I think the point of control within the current session is probably better to look at. We don't even get a signal off of it anyways. You can see how it did prop the price up for a little bit. But that's what I like to do. Let's find another example of that. We already understand how to do low volume nodes from the prior session and overlay them onto the current session. But here's one where the overnight session is just above the prior session overall. So in that case, what I would do is I would highlight the overnight session and I would look for low volume nodes to use on the New York session. So here, you can see we have one here. Wait, what the heck? Here we got one. Here we have this one here. I'm looking at the furthest pullback areas. If there's a cluster, 1, 2, 3, I'm looking at this one. If there's, 1, 2, 3, I'm looking at the biggest pullback, which would have been here. Down here as well. And then the overnight point of control is down here, which at that point is so far away. Let's see this real quick if we got anything here. This is a break of structure and through a low volume node, but look at that volume spike. That is the second most volume of the entire day. We're not taking that. We have a break of structure here. This is the most volume in the last 30 minutes or so. We're not taking that. Long lower wick, which corresponds with this area of previous support. Not taking that. This would be a signal here. We have a break of structure. We have a normal amount of volume, and we're going through the low volume node. However, our first signal candle is going to be opposition. It's an opposing candle. So we're just getting out of this at a minimal loss, really commission plus maybe a point or so, and that avoids us from taking a full loss. All right, here we have a break through the low volume node from the overnight session, break of structure. Let's look at the volume here. Volume is picking up. It's the most volume in the last 10 minutes, that's fine. You can see here that we hit 1R, comes back, hits our break even, so nothing to show for it there. Not horrible at all. And yeah, that looks like that. So that's how we're doing it. If you don't have low volume nodes from the prior session because you're trading in an area where you're just above that or way below that, you can look at the overnight session. If you're way beyond your overnight session as well, you can look at basically the New York session up to whatever current time you're at and try to find maybe the point of control or some obvious low volume nodes there to see what you're working with. In fact, Friday would be the best example of that. Friday, just a massive bull run. We're working, really with only our own data here, meaning within our own session. So really you need to formulate something like that. You can see here's a low volume node. Here's one. There's one down here. Really anytime you take a high out, just extend this and see, okay, is there a new area I can use? So yeah, there's this one here. And then let's zoom in. Let's see if we even have a signal here. No, this is way too much volume to take this short continuation down, and you really wouldn't want to after a trend day all day. And you don't end up, and this is a lot of volume relative to that one. It's only 11 bars ago. Let's say, hey, you know what? I'm going to take this. My stop's going to be there. First candle is going to be an opposing candle, so you're going to get out really at no loss. And it would have saved you from a full loss anyways over the span of this. So that's how we're doing it. We're just doing low volume nodes. We're trading out of them. The first structure break out of a low volume node in our favor of the reversal we're going to take, or we're looking at high of day or low of day session reversals as well for these signals. Again, these are all going to be, all the links to the indicators and the Discord is going to be posted in the description. If you stayed the full video, I really appreciate it. Comment saying that you stayed the whole length. If you found value in this, like, subscribe, or comment. And if you think this is absolute bollocks, type that in as well. Any feedback is much appreciated. So thanks, guys, and good luck trading this week.